Welcome back to the CC&A Insurance podcast. I am your host, Abigail Dixon, and today we will be diving into the topic of goods in transit. I have Candice Osborne with me here today. Hello, Candice.
Hello, Abby.
Candice is one of our commercial and personal lines brokers, and she deals with our clients on a day-to-day basis. Can you give a brief explanation of what goods in transit insurance is?
Sure. So the name of the section goods in transit pretty much gives it away. So it's basically goods that are being transported. That being said, that can be in any way, shape or form. They are basically moving from point A to point B in any shape or form. So goods can mean really anything. Your stock, traveling by road, rail, air. So they're basically moving in any way, shape or form, be it from supplier to customer. They can also be traveling from what we call interbranch. So it can be from your warehouse to your distribution center. So really it's any goods that are really moving from point A to point B.
Okay.
That's essentially what goods in transit means.
Can you explain what the different modes of transportation would be considered as in transit?
Sure. So as mentioned previously, by road, so that can include things like trucks, cars, LDVs, trailers. Then you've got rail, which would be your trains. Then you've got air, which is aeroplanes. And then you've also got things by sea, which that would be more classed as marine insurance. So really it would be road, rail, air. The other slight deviation from road is what we would class as own vehicles and hired in professionals. So that could also mean where you yourself don't necessarily transport the goods, but you get in a professional carrier. So that's where your courier companies come in, your transport. And as we know, in the country we live in, our roads are riddled with trucks. Riddled with trucks. So that is essentially the modes of transportation, or the means of conveyance, as they would call it.
Okay. How would one go about obtaining goods in transit insurance? What details would they need to provide?
Okay. So there are two types of goods in transit insurance that one could obtain. The one is done on an all-risk basis. The other is what they call fire, collision and overturning and resultant theft and hijacking. The two are very different. All risks is generally for your new products, brand new. And the reason why they will give all risk cover is because they know the condition of the items because they're brand new. Fire collision, which is known as restricted cover, so fire collision, overturning and resultant theft and hijacking, is generally for your second-hand products. The reason why insurers will only give restricted cover is because they don't know the condition of the equipment so generally your household contents, furniture and those kind of things, second-hand machinery, they will do that on restricted cover, comes at a lower rate. You can get all risk cover, but then that would have to be done on an arranged, they would have to do a pre-loading survey, but that can be arranged. But generally speaking, the norm is all risks for new products and restricted cover for second-hand products. The type of details that the insurers would need is what type of products are being moved, so the commodities, because all different commodities attract a different rate. So obviously things like cell phones would have a higher risk, for example, than if you are transporting, for example, timber. It all depends on for example, solar panels, lithium batteries, much higher risk because of obviously the economy that we live in at the moment. We would obviously need to know how it's being transported. So is it being transported by road, rail, air? How it's packed? Is it professionally packed or is it being packed by the owner? What the load limit is, and what we mean by the load limit is what the total value of per vehicle is being carried. So the actual value of the stock. There are two ways that you can do that. Is you can do it on a cost price which is your cost as the supplier,
Yeah.
or you can do it on invoice price.
Okay.
Both prices obviously must include VAT. And then generally insurers will, if you are a transporter or a customer that does it on a regular basis, we do a load limit, and then we also would then ask for an annual carry. What an annual carry generally indicates to the insurance company is how regularly you're doing it.
Yeah.
For example, a client that does one delivery a month, his turnover or his annual carry is going to be a lot lower than somebody that does one every single day.
Yeah, or multiple every day.
100%.
Yeah.
So you can basically, so the insurer will look at the annual carry value and the load limit, and that's how they will rate the premium. So those are generally the norm. Depending on what industry, there may be additional questions, but just as a norm, those are the kind of informations that are asked in order to get an idea of what it's going to cost you and what information is needed to get a quote.
Okay. Who would likely need goods in transit insurance?
Good question. Basically anyone that carries goods. So that, essentially anybody that, whether you deliver, it's quite an interesting thing because people say, well, I don't, customers come and collect from me. Well, then you wouldn't need. So not necessarily all manufacturers that produce goods need goods in transit because customers might collect from them. But a lot of clients will say, well, only half my stock is delivered out by me. The other half is collected by the customer. That's no problem because we then the insurance company only requires cover on 50%.
Yeah.
So anyone that basically carries goods, remembering it must be your own goods. Obviously, there is goods in transit for transporters, but that's obviously done on a very different basis. So this specific topic that we're talking about here, goods in transit, is for our clients themselves.
Yeah, their own stock.
So their own stock. So basically, it's anything that you are delivering to a customer, an end user. It's basically covers it from the time that it leaves your premises till the time that it arrives and it is handed over to your customer. That is when the goods in transit leg ends. It also can extend to include loading the goods onto the truck, the transport, and then offloading at the end user. There is also a lot of policies that provide an extension because some companies will have to, especially if they're using a professional carrier, they will have to go to a warehouse where they'll put it all together, and then they'll have a truck that does long hauls to Joburg or Cape Town. So there might be a period of time where the stock has to sit in a warehouse. So they do give, it's generally between, I would say 96 hours is generally the normal time that they give. But yeah, basically anyone that has goods that they are delivering to a customer, be it their own vehicles or they're using a professional carrier. A big word of advice when it comes to, because a lot of transporters offer insurance, clients must be very, very careful of that, because a lot of the times in their standard trading conditions or their waybills, they will be limited to a very, very, very small amount, and it doesn't even come close to covering their load. So the best thing is to take insurance for your own stock, and then regardless of what happens, if it's on all risks, you're covered. So, yeah, that's pretty much it.
Have you seen, I don't know if it was a training that we did, but there was, they found that like some of the moving companies, the insurance that they've been offering isn't provided by a financial service provider.
They do it themselves.
Yeah. So the FSCA is really buckling down on them.
Yeah. I always say to clients, if you want to know what insurance you've got, take it out yourself.
Yeah.
Don't rely on somebody else's insurance. There's so many pitfalls. How do you know that they've paid the insurance premium? How do you know that their cover's in place?
Yeah.
There's just too many unknown variables, and when you're already entrusting them with your stock, which is fine. I mean, that's what they do. But when it comes to the insurance of your own goods, make sure that you covered correctly.
Yeah. That brings us to the end of today's discussion. We hope you found this information valuable. Thank you for joining us on the CC&A Insurance podcast. Our contact details can be found in the description below, and please follow us on social media.